1% after registering its biggest one-week decline since December. Elsewhere, Australia's S&P ASX 200 added 0.5%. In South Korea, the Kospi rebounded about 0.5% after correcting 3.2% last week, the largest one-week percentage decline since June last year. Japan's Nikkei stock average was the key underperformer in the region. It was closed on Friday for a holiday. The index fell as much as 1.2% in early trading as the yen strengthened, which hurts the competitiveness of the country's exports. Away from the markets now, winning a second disputed election may have been the easy part for Kenyan President Uhuru Kenyatta. Now he needs to tackle daunting economic challenges ranging from slackling growth to an unemployment rate that tops 40%. The financial markets have shrugged off the prospect of ongoing turmoil, with yield on Kenya's $2 billion Eurobond due 2024 falling 25 basis points to 6.34% since the day before the vote, and the shilling remaining stable against the dollar, with many debt repayments due over the next 2 years. Analysts believe that there'll be increasing scrutiny on Kenya in the bond and currency markets. Well, the global head of macro and fixed income research at Exotics Partners London, Stuart Culverhouse, who's been monitoring the Kenyan economy, joins me now to talk more about this. Thanks for joining us, Stuart.
Good afternoon.
Now, can you give us an overview of the Kenyan economy before this election?
Yeah, sure. I think the Kenyan economy was performing pretty well coming into this year. We saw average growth, real GDP growth last year of 5.9%. And since 2013, under Kenyatta's first term, we've seen growth average about 5.7%. And when you consider over the last couple of years, we've had the oil price and commodity price shock, which has affected a number of countries, Kenya, being a predominantly oil importer and not really a major commodity producer, has actually benefited from that process. And I think the country's held up reasonably well as a result.
Now, what lies ahead for Kenyatta's administration as he begins his second term, especially with contentions from his opposition, Raila Odinga?
Yeah, sure. I think dealing with that second part first, I think we need to see what the outcome of that process is going to be. I don't think that the stay-at-home day-to-day has been widely upheld, so we'll see what happens. Odinga has said that he will present evidence tomorrow, and that judicial review process should play out. Hopefully, elements around that will be contained, and then if the election is upheld, and obviously Kenyatta secured a big win, probably bigger than 2013, it gives him a strong platform. I think there are some issues to come. Obviously, in terms of growth being strong, and that's a positive, but growth is going to weaken a little bit this year, but not significantly. It's fairly broad-based anyway. But I think in terms of what mattered for opposition supporters was, to a certain extent, high inflation. Inflation's eased a bit, but they remember the spike in the first quarter of this year. And as you say, high unemployment at 40% and high youth unemployment. There are some issues there that need to be dealt with. If you're growing at 6%, it may be easier to deal with those, but they certainly, I think, need the attention of this administration.
What do international investors think about Kenya in terms of currency, interest rate, and yield on Kenya's Eurobond?
Well, I think international investors have been fairly positive or benign about election risks. And I think see Kenya, if they can get through this election process smoothly, as a better or solid investment destination, obviously with high growth, one of the highest growth rates in Africa, I think this year is expected, with inflation falling back towards the central bank's inflation target. I think investors will take comfort from that. The currency has been reasonably stable after a wobble at the end or the beginning of this year, and the central bank has, I think, plenty of ammunition to contain that in a managed way. So I think investors will be fairly content with, hopefully, continuity of this government. I think some investors are going to look to the fiscal situation, and I think maybe ask more questions about getting a stronger correction on the fiscal side of things. But generally speaking, I think investors are pretty comfortable. The Eurobond, the 24s, yield of 6.2%. I think last week it was one of the only major countries in Africa who saw its bond yields fall, despite obviously a choppy international and domestic environment.
Oswald, if you were to advise the Kenyan president on fixing the country's economy, what would you say to him?
I think, firstly, the central bank, as an independent central bank, should be a cornerstone of macroeconomic policy. No suggestions that that's going to change, but I think that's important because there's always political, obstacles along that road if growth is weakening. But I think the main element on the financial side is the interest rate cap on bank lending, which I think has been a bit of a disincentive for investors and for the banks. And I think we'd like to see that overturned. With Kenya having a stronger platform, maybe that can happen. But I think also concentrating on the fiscal side in terms of the borrowing, the use of proceeds, making sure that it's all cost effective and well planned to avoid a debt problem further down the line.
Global Head of Macro and Fixed Income Research at Exotics Partners London, Stuart Culverhouse. Many thanks for joining us on Business Incorporated.
Thank you.
In other news now, Egypt's Belton Financial has announced plans to launch a $1 billion investment fund in fixed income instruments in September 2017. The company's chief executive officer, Bassem Azab, told journalists that the investment bank aims to raise $150 to $200 million in the first phase of the investment fund. Belton aims to acquire brokerages in Egypt and frontier markets, and Azab expects the company to manage the initial public offering of a pharmaceutical company worth $56.37 million on the Egyptian stock market before the end of 2017. In the meantime, Egypt has announced executive regulations for a new industrial licenses law to reduce bureaucracy and decrease the waiting time for new projects. Investors have long complained of lengthy waiting times for obtaining approvals, with the World Bank ranking Egypt number 122 of 190 countries on its 2017 Doing Business Index, partly because of difficulties obtaining permits and licenses. Egypt's Trade and Industry Minister, Tariq Kabil, assures investors that the new regulations will reduce the waiting period for obtaining industrial licenses to establish new facilities from 600 days to 30 days. Business Incorporated returns in a moment. Please stay with us.